Welcome into the Crypto Bunker podcast. It has been a while, and I apologize for that. I actually did post a video a few weeks ago, um, and I had to take it down for because it was showing my credentials and stuff that I didn't want out there. So I apologize. I haven't, I've been busy, haven't been able to get to the podcast, but really wanted to just get on here finally and to talk about what's going on here. And, you know, I have posted a lot on my Twitter at crypto_bunker about the situation that we're in right now, in terms of the macroeconomics, in terms of what's happening in the bond market with rates spiking, gold selling off because of basically people getting liquidated and having to sell their gold. People who are also long treasuries are getting liquidated. So we are about to hit an economic storm. We have a lot happening. We have student loans coming back online. We have all-time highs in credit card debts for individuals. We have all-time highs for the federal debt, debt held by the public, which is, the government, which we all take a part in. So it's a tough time right now to try to figure out what to do, but we're just going to throw some analysis on the board in terms of the charts here, as I like to do. What we're experiencing here is a very, very key level, and I tried to warn people yesterday of this key level. This is a weekly chart, and actually, you can see it almost even better on the daily chart if you really look at it, because what you can see is how key of a level that was that we just got completely rejected from. And I believe that will be the last stand of that level. I think we're going to I think we're going to test new levels potentially, and we can look at where that might be based on past cycles, which I think is important for Ethereum. Um, I'm still bullish on Ethereum long term. I'm bullish on everything happening with the futures contracts that are going through with Van Eck, and that's really good because then ETH is most likely going to be classified as a commodity in the future, which is great. It's a digital commodity, it's digital oil. I'm super bullish, but we have to trade the price action. We have to trade the macro. ETH is a risk asset. Ethereum, usually, I mean, if I think of Ethereum, I don't really think of it as a risk off asset necessarily. It hasn't climbed to that type of market cap yet. It's basically in line with a small cap tech stock or a small cap, just a small cap in general. If you look at small caps, actually, if we can get to that here, potentially, if I can get to that, stick with me here. So small cap ETF, it's just like the Russell 2000. It sort of looks the same as Ethereum, which is interesting. So it also got rejected yesterday, actually. And, we can kind of see these levels playing out, and it topped exactly on the same day as the crypto market. So if we're sort of figuring out where this might land us, it doesn't look great for this in terms of this may be just a giant head and shoulders. If we're looking at it, just doesn't look good. It's a flat bottom. It's a triple top. It's a lot of things. And to me, we're looking at a huge sell-off here, potentially down into this region. So at least with the small caps. So back to crypto and back to Ethereum. And we're on the daily here. So what we're looking at is basically we made this support here. We had, this was sort of the initial breakout point for this cycle. So it was just a complete moon from this level in March of 2021. And then we sold off hard into this level 3 times. So this was huge support. We then rallied off that support to a new all-time high. We then obviously corrected. We tried to make this support again, which was logical, right? It's a logical place to stop. We know what all the price action that took place on that level. We then broke through it hard. We rallied up to it and we could not overcome it. Okay. So even though we had this peak here, which was a very quick peak, if you look at it on the, weekly, it wasn't that long. It was like a few weeks, and we topped out. We made a head and shoulders pattern at that level, broke down, sort of almost tested again here, but couldn't even make it back. We then tested again here. We rose above it, and then we tried to make it support here. Couldn't do it. Fell through again. Tried to do it. Hit it again. And so what I'm saying is that this is now massive resistance. And people just, for some reason, they weren't realizing it in the moment. I think because the VanEck futures ETF, but like wasn't that when Bitcoin sold off hard in like 2017 or something? Was that the top? I think it was like the Pico top was the futures, some kind of futures ETF for Bitcoin potentially. So we had that history there, and then we rallied right into that. We also rallied into the 20-week SMA, which is usually our support band for bull markets. So we used as support here, rallied off of it, sort of rallied off it again, came through, broke it, and then testing it. So it's just funny how that, and then we have a downward trending, 150 week. And even in just this daily move here, we've lost the 200 week and we're resting on the 100 week. So we're getting squeezed in between moving averages. We also have the monthly moving averages, monthly for ETH, which just got rejected for the second time, third candle in a row off of the 20 SMA for the month, which is not good. That's what happened here. This was the 20-week SMA for the monthly. This is where I think we are in the cycle, basically right around this level. It was actually the same month that this sort of happened as well. So I think essentially what we can look at for this is where do we come down to here. So we can look at something like that on a fib retracement here. And we, not only that, we came up and tested this trend line. So there's just so many trend lines in play here. But basically what we're looking at is we came down and went to the 0.786, which is around 11.25 here, which is also the monthly close on this high here. So I really like that level. We closed a few monthlies here as well, so it's good support. There's really nothing in between here and there. So that is going to be my first buy point back into the market. I didn't say this, but I did, none of this is financial advice. I did sell all my crypto. And I am looking to buy back in at some point, but I just wasn't really able to justify stomaching the drop that I thought was inevitable. And so I'm riding it out as a paper bear here. I actually put into some physical gold, which turned out to be a pretty bad decision so far in terms of my money, but I think it's a good decision in terms of avoiding well, I think it's just a good decision in terms of like an investment. It's a very large amount of value in a small amount of space. So you can just kind of put it in your hand and go anywhere you want with it. And I kind of like that about it. So there's things that could be happening in the world that I don't feel comfortable with in the banking system. I don't feel comfortable even in crypto, because at the end of the day, crypto is tied to the banking system. You're not able to cash out if a cyber attack happens and the financial system collapses. So with gold and silver, you can hold it in your hand if you want. You basically, have a complete sovereignty. And obviously you do have complete sovereignty of your ETH if you have it on a ledger. I don't deny that. But what I'm saying is that there's still a dollar amount tied to it. And at the end of the day, that doesn't really pan out well in terms of, USDC is tied to a bank, things like that. So that's what we're looking at here. We can also see that level was tested on Bitcoin today. So, yeah, we have the monthly crossing bearish, which obviously has never happened in Bitcoin's history. A lot of things in this cycle are new for Bitcoin. We obviously have a 150-week month SMA showing itself for the first time, which will be interesting. I'm guessing this is our first area of support, which will look something like that based on the current trajectory, probably. So we're looking at probably a double bottom, potentially for Bitcoin at the least. Okay, we could easily lose. This. I think you could qualify this as the complacency leg. Okay, so if we really wanted to get crazy and say that this entire thing was a bubble, let's look at the Wall Street cheat sheet. I wish that this was like on TradingView. I feel like it might be. But yeah, you can see this just as well as I can. So basically what we're looking at here is, let's see if I can copy the image actually and put it on the chart. Yeah. So if we look at this, yeah, the monthly here, what are we looking at? I mean, you could say that basically that this down here was this, and then bam was the blow off. You could say this was supposed to be complacency, but you could also say that this was complacency, I think. And then you could say it will crash all the way back down to to say essentially that it was all a bubble. And the only way that really happens is probably some type of like cyber attack where miners go offline, the markets sell off massively, liquidations across the board, and it's essentially just like only hodlers, right? So it's like, what's the hodl level? I don't think that will happen. I think the hodl level at this point is probably around there. That's the level I would want to look for in a capitulation phase. If we're talking about that with ETH, I think that level is like around 400 to 500. We can obviously look at it on the monthly. It's right around that level of where we topped out on that rally in the last cycle. So it's around like 365 at the worst here, I think, for ETH. Yeah, so it's funny, like I think this is going to be the first area of support. You can see how that lines up with that pretty perfectly on the X. It's kind of like this X marks the spot around, pretty soon, that I think it will just completely capitulate. So yeah, let's take a look at equities. And you're going to see, yeah, what I potentially think could happen here. But this is basically just comparing it to the 08 cycle. I think that it sort of looks the same, like that. It's sort of like this roll here. This is also in October. So that's always like a turbulent month, potentially for stocks. And so this is potentially what I'm seeing for stocks, which would not be good for Bitcoin, obviously. Um, we would go through the 200 week. We would probably end up somewhere close to the 200 month, but I don't think we'll go as low as the COVID lows. In a complete capitulation, we'll probably go. This is like the worst case scenario, I think, for equities, depending on the situation and sort of what's happening. Um, because I think that people have just been taught for so long to buy the dip. And that's just kind of, so this would be like obviously a black swan, and we would bottom around March, which is like, another capitulation month usually would be March. So if you can be patient with cash on hand, I would say that's your best bet right now. If we look at gold, gold is capitulating pretty hard here. We've crossed the 20-month SMA, and if you look back, first of all, this trend line, it's basically touching right on the trend line right now. This goes back all the way to 2000. I mean, I drew it just kind of based on those two, and then based on that. So, and then based on that. So it's a pretty good trend line. It does scare me that something is going on. And I don't love it, but I I'm not going to give up on gold necessarily. So, but what we're seeing is the 200 week come into play. So the 200 week, let's see if it officially has been touched. It hasn't, but it pretty much has. I would say that's a touch. It hasn't lost the 200 week since, I mean, basically since the bull run, right? Since the bull run started, the 200 week is a very important level. So we really do need to hold this, and I think we will. It's a tough call though. Silver has lost its weekly moving averages. And I think, I don't know if this is a trend line. It looks like, I guess it could be right there. So these are key levels to hold here for silver and gold, big time. It's really a hard environment to stay up when rates are going parabolic. I do have this as a key level for rates. Something's going to break imminently. This is not an economy that is supposed to be able to handle this. I think it's completely manipulated in terms of the equity market to even be able to hold up right now. It's essentially a trick where this is like the final exit liquidity for the big money managers and market manipulators to get out. So that's kind of where we're at. This is kind of like the final market manipulation phase. And I think once they have had their fill in terms of being, exited, I think that they will start to buy bonds at a cheap level. But bonds are complete. I mean, this is not normal. As you can see, TLT was started in 2002. This is a backbone of the economy. This is a backbone of, the government. This is government debt. So this is what our government debt is worth right now. And we can see the weekly moving averages are completely wide. This is usually when you would want to be greedy, when others are fearful, just like you did here when the moving averages were also wide. Obviously, this is extreme. This is an extreme case. And so, there's many mechanisms at play. The dollar is rallying hard as well. It is looking bullish, but at the same time, I think that this is sort of a key level as well for the dollar. If we look back at what happened in 2000, we had this massive rally and we sort of couldn't get above the top. So I don't really think we're going to go for that top level there. We can also look at it here, where we kind of did a triple top again. So is this a triple topping situation where we do make our way to 110, we crash back down, and then in March, we triple top? It could happen. Could happen. But it would, that'd be a lot of work for it to do to get to that level. But I think the ultimate destination in a reality where the markets are still trading and we still have our sovereignty and the ability to do these things, is that we're going to end in a devaluation of the currency, because the debt is so high that you either have to devalue the currency or destroy the economy as we know it, destroy banks, destroy businesses. There is no other way around it. So something like this could play out, where we end up down here at this 70 level in 2030 potentially. I just think, I have a conniving sort of suspicion that that something is going to happen that is a black swan, that is unpredictable, that is not expected, that will usher us into a new system, potentially central bank digital currency, potentially something where people will beg for the central bank digital currency because they lost all their money. Things like that, I do think are coming. So unfortunately, I don't want that. I don't want that for sure. But that's pretty much where we're at. I think that was a pretty good quick summary of all the key assets that I'm looking at. We can also just real quick look at the oil. Oil was at a key level. I wouldn't be surprised to see that it topped out. That's a huge topping candle. So to me, this looks like it has topped. It probably will correct back down to around 80, and then we will see if it has more legs or if it will make a sort of head and shoulders and then crash with the economy. I just wouldn't be surprised if, I just don't think it has the legs. I think that we're going to experience deflation. I think that oil is going to price that in at some point. I think that it has been a good trade, but I think it's something you have to own in a retirement account. I think it's, a balanced portfolio of, energy, commodities, gold, bonds, some equities, and a lot of cash, I think is really where we're at right now. So hopefully you guys got something out of the video. If you did, please like, subscribe, and have a great rest of your day.